Welcome to the Weekly 5 Data-Driven Market Insights. I'm Eric Hamilton, and whether you're a real estate pro or someone planning to buy or sell a home, this is your go-to update for the latest housing market trends and strategies that me and my team are watching. In just a few minutes, I'll share 5 key insights that will help you navigate this ever-changing market with confidence. Every week, we cut through all the noise and bring you actionable data and tools to help you make smarter decisions when buying a home, whether you're closing deals are buying your first home. So let's dive in. So, first and foremost, let's set the stage. This week's talking points and what we're focused on this week. First and foremost, mortgage rates have stayed relatively high, just above 7%. A lot of that is due to the uncertainty that's going on with the new administration. There's a lot of talk about inflation. There's a lot of talk about tariffs, which is inflationary. And the market is still trying to find where the next move is going to be. We have a Fed meeting next week. We don't expect any rate cuts in that Fed meeting. There's too much uncertainty. The Fed at this point is a little bit on hold. At the most recent expectation is only about one Fed rate cut. But I would caution you against that because we thought we were going to have 5 last year. We only had way less than that. So they're expecting 1 now. That is more than likely going to change. So I wouldn't pay too much attention to that. This Friday, we have the Fed's preferred measure of inflation, and that's a core PCE number. That's an inflation number. Could be a big market mover depending on where it comes in. If it shows some continuing decline in inflation, could be very friendly to the bond market and for mortgage rates. And then we had this week also Trump's call for lower interest rates. Now, the thing to think about that, because I've gotten a lot of questions about that, is that the Fed doesn't control interest rates as far as mortgage rates are concerned. So the Fed can only do so much. Right now, there's really a few things that you need to watch to know where mortgage rates are going. Number one is the employment data. As the employment data continues to be strong, that is going to be inflationary and going to hurt mortgage rates. If employment data starts to weaken, we could see mortgage rates move lower. The second piece is inflation. Inflation needs to stay lower. If inflation starts to move back higher, which is always a concern, then we could have mortgage rates move higher. And the last is what I've been talking about over and over again is deficits. Anything that adds money to the deficit is going to cause the bond market to pay attention and could prevent mortgage rates from moving lower. The biggest key that I feel in 2025 that's going to help mortgage rates move lower is somehow, some way finding a way to lower deficits. And that could be through tariffs if we're bringing in more money, but tariffs can also be inflationary. We have to think about tax cuts as spending money. All these policy decisions are spending money. So we have to hope at some point we can start bringing down the deficit. That would be really friendly for mortgage rates. So the next slide that we want to share is, this is percent change in home prices over the last 5 years. The reason why I like sharing this is that over the last 5 years, home prices have been up 57.4%. Okay, breaks it down by state. This just gives you an idea over the last 5 years how much home prices have gone up. And as people have waited on the sidelines, waiting for home prices to go down, they've continued to move higher. So it's really important to discuss with your realtor and your lender and people around you, financial advisors. What is your game plan? What is your time that you want to move forward? Because the home, as far as buying a home, it's kind of like buying a stock. You want to get at $10 a share, and you say, you know what? When it gets down to 8, I'm going to go ahead and buy the stock. The problem is now it goes to 12, now it goes to 15, and you're like, okay, well, if it just gets back to 12 and you're chasing the market. I've seen buyer after buyer that we work with have continued to miss the market because they're waiting for that perfect opportunity. So this is one of those areas where you have to be very, very careful. This is the percent change of home prices since 1991. Okay. So from 1991 until 2024, home prices on average are up 321%. This is where we have to think about building wealth. And the longer you delay, okay, over the last however many years, the annual average appreciation is 4%. So that's in down markets, market moving higher, really important to kind of keep that in mind. And this slide is really helpful for people to see what home prices have done over the years. This is what we expect this year, okay? So if you take all the economists and what they expect home prices to do this year, there's only one that expects home prices to go down 0.4%, okay? Not a lot, and it's not going to go down that much. So remember, the average of all 16 is 3% increase in home prices. And this is, nationally. So it's important to, communicate with your realtor on what they expect it to happen in the area that you're purchasing. But this is all the experts and where they feel home prices are going over the next, year. This is a chart that I've been sharing a lot, and I think it tells the story in Illinois specifically where my office is. And I can't stress this enough as a home buyer to really know and understand where inventory is in your market. Because in Illinois, in November of 2024, we had 21,719 homes for sale, not under contract. So that's active listings. In 2019, that number was 52,404. So even today, with 7% interest rates, we've had 8% interest rates last year. Inventory is still 59% below where it was in 2019. If we were going to have home prices moving lower, inventory would be rising at a much faster pace and be well above where we were in 2019. So again, the cost of waiting is once rates start to come down, home prices are going to continue to move higher. So very, very important to know and understand where we are in that. Lastly, what I'll leave you for slide number 5 is this is the Mortgage News Daily Rate Index. This comes out every single day. It's a estimate of where average 30-year fixed rate is. What I like to do is we're the 3 red circles. So currently we're at 7.11. That's an average 30-year fixed for a variety of lenders. Right now, it doesn't mean that your rate wouldn't be lower or it could be higher depending on variables. This is just average 30-year fixed for where we're at today, okay? The low over the last year is 6.11 and the high is 7.52. So over the last year, we've seen almost a 1.5% spread in mortgage rates. That is a very large spread in mortgage rates. What does that mean as a buyer? What does that mean as a seller? Is there's a lot of volatility. And volatility is not going to end this year. It's going to continue to be a part of the story. But in times of high volatility, there's also times of high opportunity. Because high volatility, someone gets a rate, a few weeks later it's different, they tend to pull back. That's the opportunity where you need to take advantage of it. And we're starting to see inventory start to pick up a little bit. So that's good. That means there's more opportunity. But with more inventory hitting the market, you're going to see more buyers start to enter the market, because every time someone goes on their app and sees some home start for sale, they reach out to us and say, hey, Eric, I'm starting to see some more inventory. Can you update my pre-approval? Well, now you have competition. Okay. And that's going to create multiple offers. We're already seeing multiple offers in Illinois and most of the offers that we're seeing. So very important to pay attention to that. Very important to keep an eye on that. That's a wrap for this week's edition of the Weekly 5. Again, these data-driven insights, we try to cover these each and every week. These trends are designed to help you make better decisions and be informed and feel more comfortable with the stress that is created when searching for a home. So let me know in the comments or reach out directly. And don't forget to hit the subscribe button and turn on notifications. Every week, we'll bring you these latest market insights, tools, and tips to keep you ahead of the curve. And until next time, this is Eric Hamilton with the Weekly 5, because staying informed is the key to success in real estate. Remember, do you have a relevant opinion based on fact? I hope this helps you do that.